supposed to. I got news for you. Trades don't work the way they're supposed to all the time. So if you have that added pressure of trading with money you can't afford to lose, it's not a very good idea. All right. Now, the other thing is you and you alone are responsible for your own decisions. Could we go full screen mode? I actually am looking at this full screen mode. Let me see if I can flip back and forth and get it for everybody to go full screen mode. And apparently, let's see, we'll go into a little half screen and then full screen for all. Okay. Does that work, Scott? All right, we'll talk a little bit about Nadex, and okay, if that doesn't work, then if you need it full screen, there's actually a button on the Omnovia window. It's up near the top, just beneath the video player tab. It looks like a little box with 4 arrows pointed out. It says full screen, but that would be only for your computer. So you can go ahead and hit that, and that will put the image above the timer. Okay. It's a little bit different on mine because I've got a couple different buttons. I guess it's pushed out a little bit further. Okay. Presentation mode. Icon next to the size slider bottom right. Okay. All right. So let's go through these slides. First of all, who is DTI? Talk to you about us. Michelle, or there was a question earlier about, are we a fraudulent company? Or there are a lot of frauds associated with any type of trading. And DTI is actually a trusted name in trading education. We have an A+ rating from the Better Business Bureau. So yeah, we're out there and people are keeping an eye on us, and we've been a member of the Better Business Bureau since 1998. So we've been around for a while talking about markets in general and also about Nadex. Now, DTI headquarters are Mobile, Alabama. The company was founded in 1996, and we got a brick and mortar building. It actually does look like that, although the grass probably has grown a little bit since then. Those bushes on the side have as well. But most of the image still looks just about the same. So let me quickly go on through these slides. Let's see, download DTI's mobile app, search DTI Trader in the Android Apple Store, go to dtitrader.com/app, and you can take a look at our roadmap software, which I'm projecting my version of roadmap here. We actually have a version that's available in our chat room, which you can see on that app mode. And we're keeping track of where the markets are, and this is an important thing. If you're trading Nadex, you also want to be aware of what the markets are doing. So any sort of charting program that you have becomes important, and we'll talk about why as we move through. Let me get you back to these slides, and we're going to start talking about Nadex. First of all, I want to do a quick introduction to Nadex and then get to talking a little bit about strategies. All right, so Nadex is North American Derivatives Exchange. They are CFTC registered electronic futures exchange. They are a DCM, which is a designated contract market, and a DCO, derivatives clearing organization. Contracts are designed for the retail trader. You have low cost of entry, limited risk, and fully collateralized contracts. Also, they're only a U.S. exchange, or they're the only U.S. exchange that accepts direct retail memberships. Now, for those of you based internationally, at this present time, Nadex is designed for U.S. residents, although I know that Chip and the guys over at Nadex are working around the clock to try and get a few more doors open and get the rest of the world involved. But let's talk about cost. First of all, there's no membership fee. Once you open an account, you have an account. All you have to do is fund it, and you're good to go. Initial deposit to open an account, you only need $100. I'd recommend putting a little bit more than that in, but you can get started with Nadex at a very low cost of entry. Now, you can see exchange fee and expiration fee. To be clear, this is basically one fee that you're looking at. If you place a trade in Nadex, for each contract you have, there's a 90-cent fee. Now, you pay that both going in and going out, which means to open a trade and close a trade, I'd pay $1.80. Now, fees are capped at $9 per order, which means that if I want to do 10 contracts, that $1.80 cost would be an $18 cost to open the trade and close the trade. Now, there's also, notice the expiration fee. The expiration fee is when Nadex actually closes the position for you, when you leave it on until expiration, and then they have to close it out. Fees are capped at $9, which means if you do any trades of greater than 10 contracts, you're still only paying that $9, or if you're looking at both sides, $18. So same, there you go. Chip's got that. So the same cost for 10 as for 20 as for 100. So the larger size you trade, the greater you reduce your actual cost to trade. But again, important to note, with only an initial deposit of $100, you can get started at a very low entry trading Nadex. All right, let's move on here. Benefits, protections from market spikes. With Nadex, you don't get stopped out. You know, many traders, whether you're a futures trader or a stock trader, you're familiar with using stops to protect yourself. And how many times have you guys been in a trade where you get stopped out and then 5 minutes later the market does what you thought it was going to do? Well, here's one of the great benefits to Nadex is we can actually place a trade, and if the market goes against you to the point that you would want to be stopped out in a regular futures contract, because we're fully collateralized when we get into the trade, we can actually walk away from it. We can assume the loss. The loss is fully realized, and if the market comes back, well, then we're making a good move. Yeah, Forex traders also. Forex is very easy to get stopped out. And with regular futures contracts or regular Forex contracts or even regular stock, you're really looking at a position where if you don't use stop management tools, if you don't use risk management tools, you're going to get your head handed to you once or twice as you're trading. The best way to learn that you want to use a stop is to not use one and have the market go against you. But here's the beautiful thing about Nadex. We can take the stop management out of the trade and just concentrate on being able to get the direction right. Because if we get the direction right, well, everything kind of pays for itself. We also want to use some strategies that we can actually get into a multi-layered trade. And I'm going to talk to you a little bit about that as we move forward. But the main thing here, protection from market spikes. If you're a Forex trader, if you're a futures trader, the benefit of not having the market stop you out and then go back and do exactly what you thought it was going to do, it's a good side of the market. We're going to take a look at that. Also, opportunities in flat markets. We can benefit from volatility even when the underlying markets are quiet. These binary contracts, they allow us to trade. We can bring in some of the old style options type strategies. You can actually build spreads into your Forex trades that will contain your risk. You're also looking at situations where they're containing the profit. But if we have a good trade set up, we can actually identify a range in a market. You're going to close above this or below that, And as long as you close outside of that range, you're making money. And if you close inside the range, you make more. And we'll talk about how to set up that type of a spread strategy as you move forward. I want to make sure I hit all these slides though. So a wide range of markets. So we get to trade some of the most heavily traded Forex stock indices and commodities markets. We'll take a look at all those different markets that we can trade. I'm going to bring my Nadex platform up and show that to you, but there are a lot of contracts offered here. And let's see, market stock indices. For those of you who like trading futures, like the S&P 500 or the Dow, Wall Street 30, the NASDAQ 100, we have opportunities to trade those. So we're going to look at all that information. And then, of course, Forex markets, commodities markets, and even events. So, for instance, jobless claims is an event that'll pop up there, and we'll take a look at that. And you can see Chip telling us some of the material that's going to be there. So, first of all, what is a binary option? It's a simple short-term contract running intraday, daily, and weekly. Well, Kevin, I think what you'll find is that Nadex may eventually be available. So this may be something that down the road you would be interested in. If you want to hang out, feel free to do so. Binary options either long or short. And apparently I've lost the projection. Hang on, guys. Let me see if I can get this back up and running. All right, guys. Apologize for that. A little bit of technical issues there. Yeah, the real trick, what makes Nadex different is that they run themselves as an exchange and fit under U.S. regulatory compliance, which is a little bit different than what many binary options outfits do. It sets Nadex apart. Now, because of that, because they want to live in that world, it means that spreading the product around the world becomes a little bit more difficult thing. They've got to deal with all the regulatory agencies around the world as they look to offer their products into those countries. So that's one of the big differences there. All right, so let's see. Looks like our image is back up. So yes or no proposition, we can trade long or short, and we're looking at Nadex being priced for the retail traders. So a couple different types of trading availability. You have the bull spreads and the binaries. The bull spread is, again, simple short-term contract, limited risk, very similar to a vertical call option spread. We're trading a range with both a floor and a ceiling. Can be traded long or short, and again, price for the retail trader. Now, the contract size is a little bit different here. It's $1 per tick, but sometimes you're going to have your ticks move in tenths of a point. Like the S&P, for instance, every 1 point movement in the S&P on the bull spread is a $10 move because it moves in tenths of a tick. How do you find a broker? Linda, if you're here in the U.S., go to nadex.com, Nadex. That's what we're talking about. There is no broker. You go direct to the exchange. So cut out a little bit of fees that way. No middleman. All right, spread trading. With more volatile markets, try to buy near the floor or sell near the ceiling to minimize risk. For example, I think Tom was going to talk to you about a crude oil trade he put on Wednesday. For less volatile markets, look at premium levels and take advantage of that by buying a bit closer to the ceiling or selling closer to the floor. Less reward and more risk, but you get a premium benefit. And then why I love Nadex, and I want to show you a little bit of what I did earlier today, and I'm going to play around with this, see if we can make it work. This is actually my Nadex account. You'll see I'm actually currently in a binary position. I'm long an 1857 binary on the S&P. And just to read through this contract, US 500, that would be the S&P 500, June, so it's on the June contract, greater than 1857 by 4:15 p.m., and that's going to be 4:15 p.m. Eastern. So if the market closes above, or if it gets above 1857 before 4:15, this contract that I paid $8 for is going to be worth 100. So it would be worth a total of, it's a $92 win for me. Now the loss here is only going to be 8. What I've done earlier, I can bring up order history, and just playing around with one lots because I wanted to be able to show you guys something here today. I was in the bull spread. Let me show you the bull spread here on the S&P 500 daily, and hang on, it was the 8:15 to 4:15. So it's not the daily; it's the day market from the sunrise, 8 a.m. to 4:15, the 1845 to 1875 spread. And what I did was I took a look at the market, saw an opportunity where it looked like the market was going to rally from down around 1845. And usually the way we look at it in a futures contract is you determine when the market breaks that resistance level, which for me was going to be right around 1848, just above 1848. And if it goes there, you can see now we're trading at 1851.50. What I did was I went long at, let's see, that's actually the 19th. Come back down here, look at the 24th. So went long at 1848.6, and after going long at 1848.6, I bought that 1857 binary. So I knew that I needed to make at least $8 on the bull spread to cover the cost of the binary. So I went ahead and put in a limit order in at 1850. Basically, it picks up about $15, and then it allows me to take the market and run it back, because I think there is a pretty good chance that this market trading at 1852 could move up to challenge the overnight open at 1855.50. Now, if we go up to 1855.50, that 1857 spread is not going to be fully realized. It doesn't come up to $100 because obviously the market isn't closed at that point, but it'll be worth more than the $8. Now, if we're actually doing this on a contest level trading, then I'm going to be dealing with more than one contract. I'm going to be dealing with probably 10, 15, 20 contracts. And I'm also looking for the big hitters, the home runs. Because this is actually in a real trading environment instead of a contest trading environment, what I want to do at this point is I want to look for a way to lock in more profit. Already on this trade strategy, where I went long the 1848.6 on the bull spread, close that out at 1850. That's basically a 1.5 in the S&P. And then went long the 1857 binary, so if the market keeps going, I can take better advantage of it, because let's be honest here, I didn't really see the S&Ps climbing all the way up to 1875. That's the bull spread is worth a $300 total. I've gotten myself into a position where it cost me $35 to get into that, so the best return I could hope for at 1875 was going to be, what, $270, which is actually pretty good. But is there anyone in the room today that actually, getting to the strategy that we're on, Steve? No, this is not a pitch. I'm not here to pitch. I'm telling you about trading Nadex. Okay. Now let me be perfectly clear here. If anybody listening doesn't want to hear this, okay, I understand that. For those of you that do want to hear, I'm going to go ahead and continue. All right. So looking at the strategies here, what I've done is I've built in an opportunity to, no matter how everything comes out, this is a winning trade. So with that bull spread, the 1845 to 1875, I'm expecting, I see an opportunity in the S&P futures where the market could climb up towards its open, which was 1855.50. I'm referring to the futures market, Linda. So I'm seeing that opportunity in that futures market. Now, if I take that bull spread, there's always a premium built in. So I had to buy it at 1848.50 when we were trading down at 1845. See if I can show you a chart as the market was going through this time frame here. And the trade was initiated right around 12:30. So I'm looking at a market that has been climbing into that time frame. Looks like it's going to have some upward mobility to it. So if I look around and I find spread where the bottom end is at 1845, top end at 1875. Now, if you trade this perfectly, you're going to get a $300 return on it, but there's no real expectation of me for the market to go all the way up to 1875. My reasonable expectation is only for the market to get up to about 1855. So the difference between 55 and 75 is 20 points, with which on this bull spread is $200 that I would be leaving on the table. So the real return on this possible trade would be about $100 opportunity. That's what we're looking at. Each tick, Nick, on Nadex, the bull spread trades in tenths of a point. Each tick is worth $1. So each point in the S&P is worth $10. I'm not looking at Nadex charts. I'm looking, we could open a chart on Nadex. Let's see. Go in here, see if this will load up. So here's the way this one was moving. And I bought it right around 12:30, so right at the 1848 level. This is actually part of the SM data is indicative only. So this is the way the chart was moving. You can see that run up from the 1845 level, and then that little spike up here, which if we put our cursor right on that bar, shows that we got up to 1848. This is in Eastern time. So what I'm looking at 1 o'clock is actually here at 2 o'clock, and we can see the market movement there. Let me close that out real quick. All right, so what we're looking at right now is you have that spread that goes from 45 to 75. I'm looking for a move from about 48 to 55. So that's going to be less than $100 move. Now, if I'm trading in the futures contract, I've basically got to put my contract in, I've got to put my stop in, and I've got to hope the market goes with me and never hits my stop. And I always want to be able to bring my stop up and protect my risk. One of the things that we get to do with Nadex is we can put together strategies. And this strategy that I actually did use in contest trading and got to the point where Colin and I were about just like $1,000 apart on a $25,000 contract towards on the last day, and he and I had to do something. I had to take a little bit of risk and ended up being about $3,000 behind him instead of $2,000 ahead of him. But what we're looking at, can futures be hedged with binaries? Yeah, actually, they can, because when you're looking at that bull spread, if it's $10 per point, we know the S&P future is traded at $50 a point. So on the bull spread, I could actually put down 5 contracts, and that would be a full hedge. So now be aware that the spread is only going to take you so far, or the bull spread only takes you so far because it trades within a range. But most times you can find a range that's going to fit what you're looking at in the S&P. So what we're doing with the strategy, though, when I see that the market is kind of stalling out, and right now at 1849, S&P futures having trouble getting above 1852.50, looks like they might not be able to make it up to that 1855 level, With my strategy, what I did when I saw that starting to slow down is I went and bought the 1857 binary and closed out my spread. So I'm making money on the spread, and if the market continues to rally, I make money on the binary. What's the difference versus options? Cost, mainly. How much collateralization you have to put up. Uh, when I'm looking at the binary, it costs me the total strategy that I ran this morning that I'm telling you about cost me $40 to put on. That's $40 total, which includes the risk. That includes the risk on that. So I've actually already recouped of that 40. I've already recouped 55. So I've actually made money on this position. Yeah, options are far more costly. Yeah, and the maximum time is a week. We're actually looking at with the bull spreads. What I'm running here is to the end of the day. That's the 8 a.m. to 4:15 Eastern time. They've got run one. Should be a negative day in the market. This is the percent chance, or let me rephrase it. This is the percent that the past, I think it's a 23-year probability scale. The past 23 years, Wednesdays have not been very positive. Only positive in the Dow 28.6% of the time, and this is this upcoming Wednesday. Wednesday, March 27th, if I'm not mistaken. Let's see, today's the 24th, 25th, 26th on Wednesday. So Wednesday, March 26th, in the Dow, only a 28.6% chance that the market would be up. In the S&P, 33.1, and the NASDAQ, it gets a little bit better, 38.1. So if I'm looking for a trade here on Tuesday night, going into Wednesday morning, I can actually take a short position into those weekly binaries. Look for a short position a little bit lower down on the market, and we'll view that in just a second. Now, use this information to trade, and this is Tom Busby telling you that he sends out his T-Buzz alerts where he's looking for opportunities, showing you the trading platform there. I'll get to that in just a second here. And if you like more information on Nadex, send an email to Colin. You can open an account, nadex.com /ref/3T trade. Bring that in. This is how you open a Nadex account, and apparently that's null. So apparently it will not let me copy that in. All right. And what else have we got? Tom, Sunday night for the weekly planning session. Okay, done with the slides. Let's get back to the window here. All right. No, actually, I've been in a long position. I can buy and sell at the same time, Joe. If the market continues running up, and it's apparently not going to continue running up right now, I can put on a spread, and let me get you over into the, out of the bull spreads and into the binaries. Looking at the daily binaries of the E-mini S&P, and I'm going to close out some of these windows here. Okay, so I'm already long the 1857 spread, which is the market's coming down right now, so that's not working out. But if we go through, and let's say we were long the 1851s, which are at 32.50, if you have the opportunity to sell a higher strike, then essentially we create a spread here. Now I'm long the 1857, so it doesn't give me much opportunity, but let's say if you thought the market was going to move down, I don't think we're going to get past 1842 today. So if I were to sell this contract, my max profit would be 90.50. My max loss, $9.50. Cannot see the contracts. Okay. Yeah, that's because the image is kind of messing up a little bit here. But each of the levels, let me see if I can restart the projection. Hang on with me 1 second. Let's see here. Projection should be coming up. All right, so let's go to the whiteboard. And you guys can flip back over to desktop sharing and see what's there. Find a blank page on the whiteboard here. All right, so if we go, currently I'm long the 1857. So long 1857 binary from 8, which means I have $8 worth of risk. Now, that $8 is projecting that the market should close above 1857. We're actually moving in the other direction right now, but this is the back half of that strategy. The back half is not working out, but the front half did, so either way I look at it, I'm walking away with a profitable trade here. But let's assume for a second that the market decides to rally here towards the end of the day. If we get up to the 1857 level on the binary, no, Nick, this is a binary option. I'm long the 1857 binary option, which means I'm saying the market will close above 1857. It's costing me $8 to say that. The $8 is sort of like a probability. If you look at the screen right now, you trade between 0 and 100. So if we rally, that $8 increases. Notice that we're trading right at about 1847 quarter right now. Your 1848 binary is at 49, right around that 50 level, which means that's basically where the market is. If the market climbs, then this 1857, which is out of the pricing, will come back in, and it'll come back in right around the $50 level if we get up to 1857. All right? Anything above 1857, if we close above that 1857 level, it would be a $100 payout, which means it would cost me $8 to make 100. That doesn't seem likely at this point, but if it were to do that, then notice how, and let me bring you down into the 1848 level because that's where the market is, but notice that the strike right above it, the 1851, is offered at 1650. If I were to sell that at 1650, show you the order here, max loss of 84.50, max profit of 15.50. But if I combine that with, and we'll call it an 1848 binary that's long from $8, I'm going to change it up there to show you the example, then essentially what I'm looking at is on one side, if we close above 1848, you're looking at a profitable trade, and if we close below 1851 because I'm selling that, you look at a profitable trade. And if we close in between the two, I collect profits from both. That would be a very short example of how to work a spread on the binaries. And the great thing that we can do, which is what comes into strategies here, if you build into that, and the way I built into it, and the way I always like to build into it, is I find a bull spread that fits into what I want to see. And you can see the 1845 to 1875 right here. And this is bid now at 1848.3. Now, if I decide at this time I want to make that same trade, then essentially I can come in here, buy this contract at 1848.3. I have a max loss of $33. If the market rallies between now and the close, anything above 1848.3 would be profitable. 1848.4 is $1. Now, I really want to see $2 on here because I've got to pay the incoming cost and the outgoing cost, which is 90 cents. If we up the contract number, for those of you who are thinking to yourself, well, that's not enough money. Okay, well, when you've earned the right to trade more, You up the contracts. If you're doing 20 contracts here, that's a $660 risk with a maximum profit of 5,340. So there are ways that we can make this work and turn it into big trades. I'm not going to risk that much. And we've actually already bumped up a little bit, market trading at 1848. But with this strategy, what we do is we take our futures trade that we would normally put on, we bring it over into Nadex. We're playing the bull spread because we've got our stop would be below 1845. Now, if the market goes below 1845, everything I've risked, that $30, $33, is out. It's a losing trade. But we can go all the way down to 1839, and if we come back to above 1845 by the end of the day, that cuts into my loss. And if we get above 1848.3, that would be a profitable trade. So I've got that trade on. And then when you start seeing that you have to tighten up your stop, then we go into the binaries and find a way to control your risk. So if I'm at a position, which I was earlier, I'm up about $15 on the trade, I can come in here and look at these binaries. I can buy that 1857 for $4, close out the binary, and if the market keeps climbing, I'm going to keep making money. So we can have the trade continue to work for us. Now, in contest trading, which is a little bit different, number one, your contract size is going to be larger. Number two, you're swinging for the fences a lot more. You really aren't doing strategies that lock in profits and allow for continuation if the market goes. You're pretty much saying, I'm right, and I don't care if I'm wrong because it's just a contest, so I'm not worried about losing that money. Now, when we do contest on real trading, you'll find that everything's a little bit tighter, and you look for other types of strategies. For instance, coming back into these binaries here, let's see, 1 to 3 p.m. That one's actually expired now. Okay, so we're just on the daily and the weekly. The dailies here, if you believe that the market will not be able to get above 1854, for instance, you can come in and put $96 at risk and try and clean off that $4 premium. That's a lot like selling a put or selling a call. You collect the premium because you don't think the market's going to be able to make it back to that number. And your premium here, $4. Now this is a lot more like an option where if you're wrong, your risk is a lot bigger. But it's sort of a premium collection type strategy. Now, I would really tend to focus out a little bit further. $4 to me, that's not really enough. Now, if we get to the point where we've got like 5 minutes to go and I can pick up that $4, 4 points away from the market, sure, I'll look at that one. But that's heavy risk on that type of a trade. So it's not something you normally want to do, but premium collection is high probability. One of the things we're looking at when we look at these binaries is you're actually trading the probability. So the probabilities that the market's able to close above 1854 with a little bit less than an hour to go on this contract is only about 9%, which means that if I bought this, I don't have to risk much, but my odds of success are pretty horrible. So what we're doing with these binaries is trying to find a way to take advantage of trading opportunities to lock in profits. And the biggest thing for me is you begin with the bull spread. So over here on the S&P 500, you go to your daily, which offers you 1860 to 1900, 1840 to 1880. Notice where the market's trading at 1849. There really isn't a level that matches up with these. So you come back down, look at 8 a.m. to 4:15, and the one thing that you've got here is this middle spread with the 1845 low, which means that your strategy should be designed around being bullish during this time frame. That's what this offers you. Now at the S&P 500, doesn't show you what you want to see. The Wall Street 30, the Dow, is a pretty good market to go and look at. And what I'm looking at here, these are 300-point spreads. Notice the Dow trading now at 161.93, and those actually don't match up. So we go to the bigger daily, and you can see there's a 16200 here. So here's what we can do. If you think the market's going to be lower by the end of the day, we can sell that daily. I'm going to go ahead and put one on just to show you. Sell that daily right there. That is a open position. Well, apparently it's a working order. It didn't fill. This is what happens when you do it live. People see what you're doing and they try and front run you. Anyway, all right, so I sold that at 161.79. Now this is $1 per point, which means right now, given the spread between bid and ask, I'm down $6, but the most I'm going to be down is 21, plus the 90 cents either way. So basically 21, 22, it's a $23 risk. If the Dow moves lower, and there's premium built into that, so I need to see the Dow down to below 161.80 for that to be profitable. But what I want to do is come over here to the binaries, find the Wall Street 30, and we'll look at dailies here, and come down to these levels here. And since I'm selling, I can sell this 161.40 at 94, which puts an additional $6 at risk. That's filled. So that trade, that 161.40, and keep in mind the Dow's been down to 161.34, so that's not out of the question for the market to get there. Let's see, let's look at our open positions. Close that up a little bit. There we go. Open positions right over here. Bring that market list right up there. So what I'm looking for that binary to get to the point where instead of being down 11, it's actually going to be up more than, say, $8. If I can pull off $8 on that binary, or on that, on that spread, then I've paid for the cost of being in the binary. And if the binary goes further, if the market goes further down, I can turn it into a spread. And this is how we're going to use strategies to build weekly binaries. We just can't use the bull spreads for them. However, you could get those running, and if you already have that binary position working for you, you can sort of flip it around and use the profit on the binary to finance the bull spread. So allow yourself to get into a bull spread position again at minimal risk, and if the market keeps going where you want it to go, then the bull spread can pay for the trade. All right. So, any questions? And Billy, as far as brokers, well, you can be in and out of those binary trades. Well, yeah, you can buy and sell inside a minute if you want, but 60 option. I would advise a little bit more patience in trading. No, I wouldn't think they would. Yeah, Nadex.com is a great place to get information on Nadex. As far as strategies, Nadex is the broker. Do you guys get into strategies? Or at least, well, probably Nadex is a good place to go to find out information about participating entities that may be showing strategies, such as DTI and TradingPub. But are there any questions about the strategies that I was just showing you? It would have been nice if the market was moving a little bit more. We were going through that. But let's see here. How do you use ATR with Nadex? Well, if you're looking at the average range is about 30, or excuse me, for the S&P is about 20 points. And actually, Joel, that's one of the things that I was looking at when I took my long position on the S&P. We had already been above the average range. So it was my feeling that the market could find support and climb back towards the open. So I was looking at the ATR, and then you go and you find a binary that fits in, and you'll notice the high of the S&P was 1866, the low 1841 quarter. So the market had already moved outside of that average range. It's about 21 points in the S&P. So 21 points below 66 is 1845. That really gives you an idea. If you aren't familiar with what numbers you should be paying attention to in the S&P futures or in any other market for that matter, you can use that average range and it would have plotted out 1845. So I'm looking for 1845 support, the market climbing back inside the average range. You can see we've been up to 1850 quarter. Um, but basically, I'm expecting the market to try and climb above 1845. So what I do is I go and I look at the Nadex page, and under the bull spreads, go into the S&P and check all the different time frames. That one's closed right now, but the 8 a.m. to 4:15, that's Eastern time, and that's there's your 1845 right there. So that's where you're going to look. Now, if I look at the daily, which goes down to, or the lower levels are 60, 40, 20, and another one here at 1820 that's a wider spread. Um, None of those really fit into what we want to see. So you have to find the spread that fits in, and the ATR went a little bit into that. It wasn't the only consideration, and I think you need to be aware of this. If you're looking at trading, what we're dealing with, it's not just one consideration. There are a couple different things that we look at here, and I'm looking at that 1857 level. Close that out for 20. That would cover, just about cover my down binary. I gotta think about that. I'll give the market a little bit more time. Time now is 2:33. Um, yeah, you have choices to compare the spreads, and and by the way, I focus mainly on index futures. You see indices, bull spreads, and binaries. For you forex traders, you have the same thing, although because of the internet doing what it's doing, I'm having a little bit of a problem here. But the forex, you can do the bull spreads and the binaries in. Commodities, you can also do bull spreads and binaries. With the events, you only get to do binaries. and then the underlying indicative is not something you trade. It's just indicators basically. But whether you're someone who trades indices, forex, or commodities, the strategy of using the bull spread to initiate a position in the binary to lock in profits, it can be highly effective. Just make sure that you're making smart trades, because as always, you have to make a smart trade. Billy, the contest, Colin and I were both trading primarily in the indices, although we were getting into Forex a little bit. I caught up with him on a Forex trade. It was actually, I think it was like the first week of the month. So I caught up on him on a Forex trade because I made a play on the Euro US dollar based on the ECB and BOE meeting on that Thursday and picked up a bit of profit on that one. But primarily our trades were on the binaries, and we were using our strategies here at DTI and sort of building up into that. It was you buy low probability and you let the market climb back into it, and the only question is when do you take your profit out? So I tended to take my profit out a little bit quicker than Colin did. He'd let things ride for a little bit, so that was the big difference. He was a bit more aggressive. But for me, even when I'm in contest trading or demonstration trading, I tend to think of it like live market. In fact, what I'm showing you right now is live market, and I'm actually taking a little bit of a loss on those Dow trades that I went and demonstrated for you, and I'm a little bit antsy right here. I'm looking at that S&P and thinking maybe I should close that out and make sure that I'm still somewhat profitable on the day. Let's see, I got 15 on the bull spread. I can take out 9 here, and that would cover the cost of. I still want to let it work for a little bit. And I'm probably going to regret that, but we'll see. Yeah, once you can get the spread in, then effectively you're looking for the market to close right inside the middle of the spread. Um, but you need to be able to turn the binary into a spread, which means you have to have an initial position, have the market come up to you, and then be able to turn that into a spread by buying a secondary position or selling a secondary position. If you're in a short position, you buy the secondary position. If you're in a long position, you sell it. Let's see, buy after in profit, sell. Now profit is locked in. Yeah, if I'm in a long position, Joe, then you notice I've got 2 positions right here. Um, the binary here at 1857 is a long position. We actually we buy the bull spread, or I bought the bull spread, and then I bought the binary to lock in my profits and closed out the bull spread. It started the same way this short position did. The short position not working out right now. But short the Dow, average price of 161.79, and if the Dow were to move down um, below 161.79, that becomes a profitable trade. I use that to allow me to create this binary 161.40, which cost me $5.50 to get into. Sold it at 94.50. Now, the further development of the trade, the next leg would be, in the case of the long position here, to sell either the 1857 just taking straight profits or turn it into a spread by selling a higher strike price so that the market closes between the 1857 and something higher. That becomes a profitable trade. On the other side, with the Dow, I would need it to close below 161.40, which is not likely to happen at this point. But just I wanted to put that short side on just to show you the way that the strategy works. And even with the total loss there, That's going to be 21 and 550. So that's 27. Call it about, well, right around $30 on the line on that particular trade. So it's not much that's on the line, but you can leverage it by using those spreads. All right. Well, guys, thank you for your time. And let's see if we can make that recording available. I'm going to turn the room back over to the boys and girls at the Trading Pub.